Hi, I am the Commerce Specialist. Welcome to my channel where you find videos covering learning outcomes of various academic qualifications and professional certifications, including life-changing business ideas and hacks. Everybody needs to know how to prepare a cash flow forecast, and in this video I'm going to explain in detail how to prepare a cash flow forecast. If you're a student pursuing a professional certification or an academic qualification, you are a busy professional, you are a businessman, or you are a housewife, this video is very important and it's definitely for you. The concept of cash flow forecast is very simple and interesting. For example, think when your birthday is near. What do you have in mind? That uncle will give me this gift, that auntie will give me this gift, my parents are going to give me this, my friends are going to give me this. And especially if all your gifts, normally what I do is I tell all my friends and relatives, if you want to give me something, please give me in cash, so that I will buy what I want. Don't give me something which I don't want. You understand? So if you are anticipating that, okay, this person will give me this much, this person will give me that much, so what you're doing, you're forecasting. So let's say your birthday is 1 month down the road and you forecasted that from all your friends, relatives, neighbors, your family members, you will receive a total cash gift of 50,000. So once you estimate that your total cash gifts will be 50,000, then you also have plans how to spend that money. Okay, so let's say you want to buy some games, some new clothes, or maybe take some gym membership, XYZ. So 50,000 is the total amount you're getting, how much you're spending and how much you're left with. So that's a very, very simple equation. So let's do that in detail. As I said, this topic is for everyone. Even if you're a business person, you need to know the flow of cash, when it is coming, how much it is, and from where it is coming, and when your cash are going out, how much it is, and the reason it is going out for. So please pay attention. This concept is very important and it will help you a long way. So when we are preparing a cash flow forecast, you start off with receipts. Receipts, or you can write cash inflows. So here I'm going to mention some common sources where cash may come into the business. Cash sales. You're assuming you're selling goods on cash, so obviously you're receiving money. So what is your expected cash sales for future months? Say 100,000 here, 200,000 here, 50,000 here, and 400,000 here. We're also expecting collections from credit customers. You must have sold goods on credit to customers and you have to collect from them. So one source of money coming into the business is cash sales. You sell and you get the money immediately. The other source is that last month you must have sold some goods on credit, so they're going to pay you now. So if you've sold goods on credit in December, they're going to pay you in January. So I'm just assuming some numbers. Collection from customers in the month of January from credit customer will be 100,000 here, 300,000 here, 100,000 here, and let's say 500,000 here. You may sell some non-current assets which are not required in the business, assuming it to be another 100,000 here. Okay, nothing here, and 300,000 here. Then if you are a public limited company, you may issue some shares. Issue means you sell, issue of shares. Let's say 100,000 here, nothing here, and 900,000 here. There is a possibility you take some long-term borrowings. Okay, some loans, nothing here, I'm just assuming, let's say 100,000 here. So the first step is to foresee, to forecast in the upcoming months how much cash will come and through what source. So if you look at this, in January, February, March, April, cash sales will be 100, 200, 50,000 and 400,000. Collection from customers, we are expecting to be 100,000 in the month of January, 300 in February, 100 here, and 500,000 in April. Sale of non-current assets, we are selling some non-current assets. So we are selling in January, nothing here, February and March, but 300,000 worth of non-current assets we have planned to sell in April, so we'll get some money. Selling of shares, we are selling 100,000 worth of shares. These are all in US dollars, okay? Amounts, these are all in dollars. So shares sold for 100,000 in January and 900,000 in April, nothing in February and March. So if I add these up, I will get total receipts, or you call it total inflows. This is 400,000. This is 500,000. This is 150. And this is going to be 2,200,000. So this is all good news. We have forecasted that in the month of January, we will have total cash coming into the business is 400,000, 500,000 in February, 150 in March, and in April, 2.2 million. Now a very important question. Tell me a business in which cash comes in and never goes out. None. So when you receive cash, there are some possible payments, some scheduled payments you have to make. So the next step for a cash forecast is you write payments. These are all forecasted payments, okay? Or you can call them also as outflows, outflows of cash, cash outflows. So obviously when you have cash sales, you may have cash purchases. I'm assuming it to be 50,000 here, 200,000 here, 200,000 here, and 300,000 here. Then there will be some payments to suppliers. Now these are credit suppliers from whom you have purchased goods on credit. You know, you sell on credit, you also buy on credit. So in December or November, when you purchased on credit, you promised to pay after 1 or 2 months. So those purchases are to be paid in future months. So I'm assuming payments to credit purchases for December, now we're paying in January, is 100,000 here, another 100,000 here, 100 here, and 300 here. Let's assume. These are all assumed numbers. Selling of non-current asset, there is a possibility that we have to purchase. Maybe we sold some unwanted motor vehicles and here we have to purchase some non-current assets, purchase of non-current asset. Let's say a generator, we expect to purchase it in the month of March. Let's say it's 400,000 and nothing here. If you're selling shares, company law allows you, there are provisions that you can redeem your shares, you can buy your own shares. We call it redemption of shares. Or you can also call it treasury stock. Treasury stock, okay. So we have planned to purchase some of our shares back in the month of March, okay, and nothing here. And if you have any long-term borrowings, you may plan to pay them off. Payment of long-term borrowings or bank loans, but nothing here, or maybe we are expecting to pay 200,000 here. So that's it. So if you add all of them, this is 150,000. This is 300,000. This is 800,000, and this is it. This is also 800,000. So what I'm going to do is I'm making life easy. I'm putting them in box. So that means this is the total of your payments. Total receipts, I'm referring them to as A. Total payments, your total payments, I'm referring them to as B. Okay. I'm referring them to as B. Now there is something known as net cash flow, which is A minus B. So how much did you receive in the month of January? Expected cash collection, 400,000. How much you will be spending? This is your expected expenditure. So 4 minus 150 is 250,000. How much you are expecting to receive in February? Total cash coming in is 500,000 and you are expecting to pay 300,000. You will be left with 200,000. This is the cash balance actually. 150,000 is the cash inflow and 800,000 is the cash outflow. So 150 minus 8 will give you a negative 650,000. Okay, and 2.2 million minus 800,000 will give you 1400,000 positive. Now I'm assuming, this is just an assumption, add opening balance. Opening balance would actually be the ending balance of December. Okay, we are in January here. So the ending balance of December will be the opening balance of January. Let's say this is just an assumed amount, 50,000. So how much do you have in the end? Your ending balance of cash, expected ending balance. Look, how much came only in the month of January? 400,000. How much went out in the month of January? 150. So net January is 250. But you had from December 50,000 with you. So 250 plus the balance which you had from December, your ending balance is 300,000. Whatever is the ending balance of January will become the opening balance of February, 300,000. So 2 plus 3, the closing balance is 500,000. Whatever is the closing balance of February will become the opening balance of March, 500,000. Now here if you notice, you already have minus 650. So 500 minus 650 will give you a negative balance of 150,000. And this negative balance of 150,000 will be the opening balance here. So 1400 positive and negative 150 will give you 1250,000 as your final balance. So what is the purpose of preparing a cash flow forecast? As I said in the beginning, we are making a forecast, means it's an estimate. Sitting in December, we got to know that the month of January will be a good one. Why? We have positive balance here. So January, we are not into any cash crunch. Enough money is coming in, less is going out. We still have some money left at the end of January. How much? 300,000. In February, 500,000 cash is anticipated. We are expecting to receive 500,000. Your possible payments are 3. You're left with 200,000. Previous balance of January is 3. 200,000 here. So end of the February, we are left with 500,000. But the situation is different in March. In March, negative 550 means we may have to take a bank overdraft. We are short of fund in March. So the beauty of preparing cash forecast is that we are preparing it in December. In December, we got to know in the month of January, we will be safe. In February, we are in good position. We have more cash. But in March, it's a very difficult and tight situation. We will be in negative. That means the cash coming in will be less than the cash going out. So if we get to know this in December, that the month of March is going to be troublesome for us, that means we should do something from now. It's not a surprise. In December, when we prepare a cash forecast for another 3 to 4 months, so we got to know in advance whether these months will be very, very easy for us or they're going to be difficult in terms of cash. So January we are getting a positive balance, February we're getting a positive balance, March we're getting a negative balance, and we got to know this way before time in December. So now what to do? If we get to know in December that March will be a difficult month, we have to take some necessary precautions. What we can do if there is a possible negative balance in cash in the upcoming months, what we can do is we can speed up our collection. We have to collect money from customers. We speed up the process, give them some discounts so that they can pay before time. Okay, we try to sell more on cash. We have to increase our cash sales, speed up of sales. If there is any idle non-current assets which is not in use for future periods, sell it off because your money is stuck in assets which you are not using. If you're a public limited company, sell more shares so that you get more money and you can avoid this position. You can also try to control your payments. What you can do is you can ask your suppliers, give us more credit time, extend our credit period. If you have any planned purchase of non-current asset, can you see this? 400,000 you have planned to purchase here. You can delay your purchase to this month where you have enough money. So you will not get this position. Okay. One thing I forgot to tell you is in your payments, you may have some recurring expenses also, like monthly salaries, rent and all that. So you can put them here. But the idea remains the same. If your payments are more and your income is less, you may have negative. Okay. So here your cash inflow is 400,000, outflow is just 150. You're getting a positive balance. You're getting a positive here, but you're getting a negative balance here. So that's one of the reasons companies prepare cash forecast, so that they know before time what are the months where we may face a cash crunch, a difficult liquidity position, so that before time we can take corrective measures, necessary measures in order to avoid a negative cash balance, in order to avoid taking a bank loan or a bank overdraft, because loans are expensive. On overdraft, interest is calculated on a daily basis. So guys, if you have any question relating to cash flow forecast, drop a comment. I will reply to as usual. If you're not yet subscribed to my channel, please subscribe to my channel. Press the bell notification button so that you get my videos on a timely basis. If you like this video, please share it with your dear and near ones so that others can also benefit. Thank you so very much for your precious time. Love you all.